All right, we also have a really good audience online, 15 people, so that's good to see as well. But okay, thank you very much for being here today. I'm actually positively surprised by the number of people, considering that we all got, I think, the morning alarm alert on our mobile phones. So I'm happy to see that the sun is kind of somewhere around there and we're still able to come here and enjoy the event. But yeah, without further ado, today's agenda is fairly simple. We have a few announcements to make as well. We have a very special guest. We will have a fireside chat with Amr, who's a, let's say, a fintech veteran in the industry. And we have actually like anti-World Cup startup pitches. We have 5 startups coming from countries who didn't really qualify for the World Cup, but we have them here. But yeah, all in all, there's a few things that we would like to mention. One of them being is that last month in May, we took part in the Latitude 59 pitch competition and are consolidating an investment together with Estonian and the Finnish angels. And the 2 companies that won the pitch competition are Granarium Technologies and Dogbase. There will be an announcement coming in the next week providing you with more details about these companies and the investment terms. But this is just kind of a brief introduction for you to know that there will be a possibility in participating in these investments. And these investments, both of them will be administered by LatBAN, Estonian angel investors. Next up, I will give the microphone quickly to Ansis. We have 3 new investments also to announce, but you'll provide more details about them.
Oh, yeah. I don't need this.
Okay.
We have 3 projects. Since summer is coming, we are trying to close everything as fast as possible. You already seen that we have closed this Siena feeder. I hope everyone who wanted has joined. So I think it will be a good project, not only because of maybe financial result, but also about strategic some fit between us as a very early stage and them as the ones who need to follow us, follow our investments and maybe take some of them. Still we are waiting for interest from you regarding next tranche for Adventum Tech. More information for that you can get from Girts. He is working with them very closely. So hopefully we will collect the necessary amount. Quite a lot of people already has joined, so would be happy for more to join. And then we have in fact closed the investment which was announced after TechChill. This is Estonian company Vybil. We collected 112,000. It will be invested. The investment round is larger, so technically we can increase. But yeah.
Yeah. So if you have any questions about these 3 investments or would like to get more info, yeah, feel free to reach out and ask any questions. But now the last announcement, which I guess is more focused to the members here today in the room and online, is that we have created a new LatBAN members portal that you can access through our website. You log in with your LinkedIn account, and it's basically your home dashboard for viewing all the information about our operations. You can view all of our members, their contact details, their things that they specialize in. You can view past event recordings and information, check the deal flow of all the startups, not only the startups that you see during the pitch events, but also the startups that we get on a regular basis into our deal flow. You're able to view all of the syndicate investments there, ask questions also in the discussion channel. So it's basically, it's a new thing that we have built. It's going to be home of LatBAN's operations in terms of the digital environment. And it's fairly simple to use. Go to the website, log in with your LinkedIn account, and that's it. If you cannot log in, all you have to do is just message me your LinkedIn email address, and that's it. But yeah, that's that. About, let's say, the official part of the event, we have invited a very special, I would say, fintech veteran of 30 years in the business, Amr, to have like a fireside conversation with him about his experience in running different companies, selling companies, raising investments. And just a quick note before we begin the discussion, I would like to keep this discussion very open. I have prepared, of course, my own questions, but if you feel at any point asking a question about what we're talking or anything else, feel free to raise your hand and we can keep this discussion in a lively format. Round of applause to Amr, and I can give you the floor to make your self-introduction.
Thank you.
We can sit down if you want.
Okay, it's kind of nervous when you make those speeches. Hi, everybody. My name is Amr Mohamed. Just a bit intro. Born in Egypt, and I moved to New York in 1997. My background before moving, I built the first internet in the Middle East back then, before moving to New York. Joined Bank of America. I was there for about 7 years. Then Maryland, and then a couple of startups. So most of my life is spent in New York.
A little bit higher.
Sure. Yeah. And father, I have 3 boys. They're older. And he moved here about 3 years ago. So I'm in Latvia now.
Okay, I guess the first question we can ask, why did you move to Latvia? Just for the sake of it.
Sieva.
Sieva, okay.
So my wife is here, so I'm going to be in Latvia.
All right. As you might see, I just put like a very brief like CV of Amr on the screen just for you to kind of understand like the timeline of it and the different names of companies that might be mentioned in the conversation. I guess what I really wanted to start with is kind of dating back to like those 2000s and 1990s. You started in trading business. Why did you kind of leave it, and also kind of, because at that point in time, fintech wasn't really a word,
Correct.
And you were kind of already in the space of it.
Yeah, so when I went and I interviewed at the bank, and I'm like, oh, I can do coding, I can build things, and I was like, oh, he's coming from Egypt, just put him on the help desk. And I tell you something, it's probably the best thing that happened, because we were the help desk for hedge fund managers. The way it works is they're trading all over the street, and then 6 p.m. is a cutoff. You have to get the trade file, because if they cannot get us that file by 6 p.m., they don't know what positions they have the next morning. So how many shares they have in IBM, and so they cannot really trade. You got to get that file at all cost. So when you're dealing with that, it's like you're dealing with the impossible. I mean, if you have to run to the manager's office to get the file, you're going to have to do that, because 6 p.m. is the cutoff. So really, I was looking at it, and at the bank, it was frustrating in terms of the processes that were break. What would break to prevent us from getting this file, whether it's the trade capture process, whatever it is. So I started in the early days around like, okay, how do you improve this? I started tackling one system at a time to really improve the process at the bank. So that was the foundation. I started getting into the actual business and understanding. So I think there's one thing, looking back at Wall Street, it teaches you, it's how do you serve as a customer or the user, that they're always going to be number one. It's like whatever you're building, whatever you're doing is like, how do you put them first in everything you're doing?
All right. Knowing this, let's say, background information on you, it's important to mention, I guess the most notable ventures from you in the past was Merlin Securities. You started it, I think, in 2004. You got an investment from Sequoia Capital in 2008 in the amount of 20 million. What was it like? Like, actually, you reached out to these tier one investors. What was the experience like raising capital from such investor? What surprised you about the process?
Nerve-wracking when you're pitching to Mike Morris. It wasn't that. So it was a leap of faith. I think, at the bank, I left in 2004, and we're trying to do things that were disruptive at the time. And at Bank of America, as you can imagine, with a big bank, there was a lot of red tape around any big changes. So we're trying to really push the envelope around big changes. So we left and we started Merlin. And at the time, we were competing really with Morgan Stanley, Goldman Sachs, and so forth. And how do you compete when you're a firm just 2 million and really trying to go after those guys? So we had to change how the industry worked at the time. So traditionally, and still up until today, most of those firms, the way they work is they get the trades from their managers, they run a process overnight to generate all these accounting reports. And we challenged the status quo at the time. It's like, why do we need to do that? Why not, as we get the information, we generate the data at the time? And it was just like sort of like an early version of an event streaming system at the time. Nothing like this existed per se. And we started and we had a couple of clients, and then Sequoia, we had connections to them. And in the first 2 years, really around the Sequoia time that came in, we were able to bring a lot of business from against this competition. 2008, during the bank meltdown, I think that was the biggest thing that really happened to Merlin, is when we started building Merlin, again, having a single custodian for a client didn't make sense. So in effect is when you open your account at a bank, they become your custodial. They hold your money. So when we built Merlin, again, we challenged that concept as like, why do you have to have a single custodian? So I built the infrastructure around that you can have different accounts with different custodials. We didn't know that when Bear Stearns went down and the whole bank meltdown happened, that was the best thing that happened to us, because you have a lot of, it was sad at the time for a lot of companies losing a lot, but we were in the receiving end because we had the only system on Wall Street that had the capability to do multi-custody diversification.
But what about that conversation with the investor? I mean, what surprised you about their decision making?
So at the time, basically, it was the first in terms of getting getting into the prime brokerage was not something that traditionally, I think for them was more around, we were creating a new kind of system that didn't exist. They were very interested in. The conversation, I mean, I think it was the numbers we had and everything. So I wouldn't call it was a long conversation to get the investment. So it was.
All right, but was there like anything critically that they asked, or kind of what surprised you in their the way that they reviewed at you, the way they looked at you?
Well, we had Scott Carter after on our board from Sequoia. That was most of my interactions after with Scott Carter, and it was one of the things was like, okay, they were pushing for is like, okay, how do you create a new category outside of that? So the traditional way for those brokerage firms at the time was you're focused on hedge fund managers. And with Sequoia's direction, everything is like, okay, why don't we start thinking about the fund of funds? Why don't we start thinking about the allocators? How do you create awareness around the capabilities of the platform so that they are the ones pushing their managers to move to Merlin? And that worked. That was a lot of guidance from them around that.
All right, but I mean, the time was 2008. It was like pretty much in the peak of the financial crisis. You're working in Wall Street, your clients are Wall Street. Was there like any kind of doubt in the, let's say, all right, you get the investment, but what about the execution after it?
Yeah, I mean, we had a lot of those. We had a lot of those because one of the challenges is like when you're building a system like this, one, you're relying on a lot of different vendors. So you have also, there is always the counterparty risk when you're dealing with that. With this technology, where there's risk in terms of custodials. And Bear actually was going to be our first custodial, and we're building to that. So, and we had an exposure there, but we also had a second custodial with Goldman that worked in our favor around the 2008.
All right, switching now, let's say 4 years towards the future. the company gets sold to Wells Fargo, the fourth largest bank in the US. Apologies. What was that like? Can you tell me more about the acquisition process? Did they approach you? Did you approach them?
Yeah.
Was there kind of pressure from the investors also for you to find the exit route as well?
Well, so I think at one point, I think Wells did approach about 2 years, started about 2 years before the sale, with one of a couple of others, we had like approached by two at the time. And I left, there's one thing here, I left 1 year before the final exit for
Okay.
Maryland.
All right. Okay, so it's hard to comment.
After, yeah, I already left. I already
Yeah.
cashed out before the final exit.
Okay, all right. So, but still, was it a significant cash out when you knew the exit that they had a year
Yes.
later?
Yes.
All right.
We did well.
All right, but okay, then the question also continues based on that. You get this exit, which is probably a significant one, and you're a technical co-founder. Why go into starting new ventures as a solo founder? Because you had a track record of going into founding companies, and it's not always the most common that you see technical co-founders taking the lead role of being at the, let's say, business side of things.
So to answer your question, is two things. One is, I mean, I've always looked to, creating and building companies is something I started doing since I was 16 years old. So for me, it's very, very hard to, after an exit, to say, okay, you just sit or go and collect pay. So I consider myself, I always try to continue building. So it's very hard. The leadership aspect, going through bootstrapping a lot of these companies, you start assuming a lot of different roles because titles are sort of external, but internal, there's a lot of things that can go, and you have to wear a lot of different hats. I remember at Bank of America a situation where we had system load and we couldn't keep the servers up and the market is about to open. And I had to make a decision at the time, although I was on the engineering, but I had to make a decision to turn off access for all the auditors and the accountants. And everybody's like, this is crazy that you make a decision to turn off access for the bank. But it was the only way I can have the traders actually open without having enough exposure so that we can limit the exposure for the bank. So my point is you wear a lot of different hats throughout that. And throughout all the startups, we've done everything. Neumetria just started getting more into have compliance, have operations, have technology. So I gravitate towards taking the lead on that.
All right. I mean, all right, building up on that, you've been in these different ventures. You also took part in Aspiration, helped them raise also millions of dollars for their funding round. Can you, I mean, with the investors in the room, what would you say is the biggest difference, let's say, in fundraising back in the past, let's say in the US to US investors, and now when you're building a new project out of Latvia, fundraising, let's say, also from regional investors in this side of the world?
It's a lot harder.
Why?
Because, I mean, in the US, here's how to, Aspiration was crazy in terms of fundraising, how we did it actually in the beginning. So we had one of the founders, he was the seed investment, and the relationships he had and so forth. So we were able to raise very, very fast for Aspiration. And then what I'm seeing here, we've been working right now on Neumetria and just have met a lot of great VCs and so forth. But I think that's the traction. I think it's different. Like
we ask for it?
Yeah, ask for traction, but it's like, okay, there, like back in the US, you can go. I mean, the last raise was like, we raised 2 million at an 8. Like Marlin was crazy. Marlin was raised, I had an Excel sheet prototype and I was raising on that. And then a couple of other companies just like had a pitch deck. You have an idea, you can go raise 2 and then 8. That was like standard a lot. I think what we're seeing right now is just traction. That's
all right. But in terms of also what about the founder mindset? I mean, you touched upon the switching from a technical co-founder to like a general co-founder who's also thinking in terms of business perspective. Being now here in Latvia for 3 years, probably getting very much involved not only in the fintech community but the founders community. What surprises you most about it? Like, is it still like not ambitious enough, not thinking large enough, or is there something else?
So taking more risk, and maybe I say that for myself and just the exposure, but I think you look at the current space right now. I mean, the hardest thing when you look at it is like, in my mind, I look at it, software is going to be very, very hard to go build in fintech or on software. I mean, I don't know if it's months before, so, and it's all about getting moat, and that's the thing that changes things. So if you're chasing moat right now and you have to get the validation, so the old playbook is like, you throw that old playbook, is like, okay, you had product, you had engineering, you had design. I question if that, or you gotta figure out one thing and you just gotta focus on it and perfect it. So I think with AI and everything that's happening right now, a lot of those playbooks are questionable. Like your go-to-market strategy, like at Neumetria, I'm gonna speak about that later, we're throwing a lot of those old playbooks. For us, it's like, okay, I don't know what worked last year, I'm not sure if it's gonna work anymore. You just gotta have to be, and you're competing with either, you know, companies with huge capital, and the biggest thing is also you're competing with the AI companies getting into the verticals now. That's the other thing. So.
Okay. And based on your experience, I mean, you've been involved in different ventures, co-founded different ventures, raised money. What's one thing also that, let's say, what it does to you psychology-wise when you take investors' money? Like, is there something that I know people should be kind of aware of when taking millions of investors' money? Is there some kind of mindset that you need to adopt? Like, what happens?
It changes everything, because I mean, you have a big, once you start taking investor money, you have a huge responsibility, you have accountability, and everything's kind of like, with Neumetria, I was self-funding it for the past 2 years and delaying, and we didn't raise until we're at a point. One, you have to be 100% sure about what you're doing, because the last thing is just betting with the investors' money. You gotta be 100% ready in terms of the idea and making sure in terms of what you're doing, and then the accountability aspect. When you're taking, depending on what, if you're taking VC money, you know, the investment is made around a milestone. What are you hitting from the milestone? So if it's a seed, okay, there's an expectation how fast you can get to a Series A. So depending on what you're trying to do, are you trying to build a business to be profitable and it's okay to do that? Or are you trying to build the unicorn and there's VCs for that and there's a track. So depending on what you're trying to do, I would advise founders, you know, you gotta look in terms of what is your aim, because with different VCs comes different commitments and different expectations.
All right. But now also back to like the US landscape. I actually found only 2 days ago, while still researching all of the topics, the company Aspiration that you were a part of. It did like this SPAC,
2 billion SPAC.
2 billion SPAC listing, but the story didn't quite end well for the founders. No. For your information, the founder was sentenced to 14 years in prison.
14 years in prison.
Yeah, does this also kind of this, I don't know, US vision and selling big and dreaming big is sometimes kind of taking you out of scope as well?
No, but you got to look at it. So it was with Joe Sandberg, and he was ex-Tiger hedge fund, and he brought all of us. He put his own money into the company, and then we had a CEO and myself and a product person and operations, and we started building. So it was the seed money. I was there through raising the A and the B, and then I left and I cashed out. And I was like, after when I saw this SPAC, I was like, what the hell did I do leaving the company already? So just for clarity, he was the seed money, but he was not involved in the management. What he did after that, because it's so he went, and because the reason I joined Aspiration, because we had a big philanthropical aspect around planet and social aspect to it. And he was trying to inflate valuation by getting deals with celebrities. So he'll pay them so that they say that they put hundreds of thousands in planting trees. And SEC caught up to that. There was, I can't remember, there was hundreds of millions of loans. And the sad part is, aspiration cost me a divorce. I was working 30 hours straight to build a company. And a lot of the people at the time, they were doing the same thing. And when I saw that these people were counting on an exit, a life-changing exit, and it didn't happen, it was really, really bad to see that. There's a reason why I'm doing Neumetria right now. Some of these people are actually with me on the team and from different. So right now we have a team with Neumetria, and a lot of us are back to build because it's okay to go and try to build a company and try to make money, but but you can always take the high road. So it's sad what happened with aspiration. Just was a lot of work to see that go away because of somebody's greed.
Yeah, actually, you've been mentioning Neumetria as well. In a few words, I understand that you're now doing this out of Latvia with team members in the US and all over the world. But what it is actually, just for the people in the room.
Sure. So I think I've always had a challenge with fintech. We did a great job building access. If you look at it, or you can open a bank account, you can get a mortgage, you can get a loan, you can do everything from your phone. But today is how many apps everybody has on financial apps on their phone, and we feel that products don't understand the user enough. So we're building Neumetria as a behavioral layer to help apps understand the users they serve better. So we built one platform to provide that intelligence for apps, different use cases, whether it's banks, fintechs, brokerages, exchanges, to be able to provide a better user experience, user flow.
Has there been any regrets in trying to do this out of Latvia? Because I would imagine such, let's say, sophisticated product kind of is not so perfectly fit for the region. But again, it could be done out, let's say, in the US, in the States, where it's kind of more understandable.
Well, it's definitely easier from a fundraising. So we start with that. So fundraising, yes, is a lot easier. But I haven't been here, I tell you something really interesting. I've been here for a bit over 3.5 years. And one of the things we're trying to solve with Neumetria, and it's really, really big challenge, is when you think about apps and fintech companies, they treat the user for the most part the same. As we have different cultural differences, different ways we look at money, different ways we look at gifting. The values are different, and how do you build a system to do that? So Latvia gives us the ability to, one, a lot advanced banking system than the US. I'll tell you that. The open banking and everything is a lot, much more advanced. And for us to be able to work in a market where we can get a feedback and be able to iterate on a lot of the things, it's perfect for us. And then the other thing is looking at the Baltic today, everybody is looking at the US and the G5. It gives us a space to build and perfect something where, we're building global, because what ends up happening for a lot of companies, you build the US and it's like, okay, how do I go to the UK or vice versa? Or how do you go to Germany? We're building from day one global. So we're launching actually next week with the US and the Europe, completely two different systems from day one as a global.
All right. Any questions from the room? It's an open floor. You're feel free to ask anything about experience in fundraising, in US ventures, anything you would like to clarify or ask. Open discussions are always welcome. Yes, please.
Maybe a product principles question. So we know a lot in Lithuania, so we're in Lithuania, and we know quite a bit about the Revolut's history, which is also like a big, booming, well-known fintech. And some of my friends who were there stumbled into this principal decision. Not always what is good for the business financially, because of how the financial system works, is the best choice for the user. And you keep mentioning, the needs of the user. So I was just curious, in financial product space, how do you balance what's good for the business and maximum good for the user, and how do you make those trade-offs?
It's a great question. It's something like we're struggling with every day in terms of things. So we have a line in terms of how we build. One is you don't want to bite the hand that feeds you by not taking the business. But I think you can draw a line. Like there's that at Neumetria we're building something around. There's a core understanding is if there's something that needs to be surfaced that benefits the user, we'll draw that line that we have to make that understanding available for the user. And building the products. Now, there's a lot of different ways we can look at this, but at the end of the day, the companies that create, the users will forgive you if you made an error or made a mistake. They're not going to forgive you if you knew what you were doing and there's an error. That's the reality. So I think trust is something, you cultivate trust, you're going to get a lot of that. So that's what we're focused on, is working with the partners that will appreciate. We're putting a lot in terms of creating the right transparency, the light, and I think maybe there is going to be a percentage of companies that might not work with that, and that's okay. But I think that's the only way you can create real change and be able to service people. When you look at the U.S., for example, today, I'm sorry, I might go off topic here for a second, but if you look at the debt, people are more in debt. You have more apps, but people are more in debt. You look at, and my observation here working, and I look at it, it's like, okay, the amount of savings accounts, it's a big percentage. It's like, how do you introduce other products? So we can err on the, we look at the convenience of having those products, or we can try to make a change.
We have time for 2 or 3 more other questions. Please, anyone? Any questions? Yes?
Maybe I was just thinking, you were talking quite a bit about the fundraising, right? So, and if you still want to build from here, what are the life hacks or some tips that you can give to access the capital of that?
I think, the biggest thing is like, I'm trying to figure out what's the best way to answer this. So it's hard. In fintech in general, or in general? In general right now, because the biggest challenge you're running into is like, okay, moat. This is the thing that keeps coming up, is moat. That was the very first thing that we run into constantly when we're talking. Is like, how are you differentiating? Because within the age of AI right now, whatever you have, anybody can just go and build it. So how are you differentiating? So distribution, figuring out distribution is big, because you look at it before, it was like, okay, product and then market fit and so forth. I think distribution is really, really big, figuring out from the beginning, because that's how you can get in terms of go-to-market. So that's the one thing, if I'm looking back right now, is the main focus for us has been working on the distribution.
I got you. So many like legal things now in the scope, right? If someone wants it, they basically will find a legal way to get through it, right?
No, I'm sorry.
From in terms of like legal entities and everything, because that's not the problem.
Yeah, I apologize. Like,
no worries, I got your point.
Okay.
But actually, this question kind of got me thinking. You're building out from here. You're also raising from trying to raise from the US still.
Correct.
And here. But still trying to, and here, but still trying to, let's say, have some operational impact over here. But still, like raising from both sides, there's a kind of huge gap in terms of, let's say, valuations, funding amounts. And when you're trying to apply, let's say, the same US, let's say, logic back to the Baltic states, there's a huge gap, I imagine, because I think here locally we like to stick with like medium averages, statistics, industry averages, etc. But again, then you're kind of not balancing out, or
correct,
are you?
Correct. No, that's correct. But depends what you're building. If you're building, if you're building a company in the US as a US company, is one valuation. If you're building a company here as a Latvian company, is another valuation. When you're thinking about building global something that spans across, that puts you in a different. So how do you value a company like, and you had unicorns here in terms of how to be. So I think, again, it comes down to we're looking building a global platform today, global company. So we have a Delaware company, we have a CIA here, we have an OU in Estonia, and we're looking at it as it's like, how do you bridge that? But we're looking at all three markets. So yes, there are challenges around how you bring, like in terms of the size of the round and so forth, but in the beginning.
Yeah, still manageable. All right. Any last questions? Yes.
Hi, great conversation. And I'm wondering, you are working in B2B industry all the time. And like we are also in the B2B, and distribution, as you mentioned, is something that all of us have problems with, especially in this region. I think we are good builders, but not as good of marketers or sellers. So it would be great to hear your opinion, like how you actually distribute your attention to marketing and B2B sales, and which channels actually, in your experience, work the best, and you would maybe recommend for us, like builders here,
Sure.
to focus on.
No, it's a great question, and I mean, it's as a founder, for example. I mean, I sell directly, so I've been just like LinkedIn. I've been going after, founders, CEOs, and straight up. It's like, okay, and at least probably 50 outreach I do every day, every morning, and you get a lot of like people doing so, and you get some. So that has been one. Conferences, start going to conferences, actual just at Money 2020, and it's. I mean, I look at it. I was like, okay, there's a lot of cold calling I was getting, and I wasn't answering, and now I see myself. I was like, doors getting shut, and it's okay. And you just got to get through it. But there's nothing, like a founder and going out and selling. You can tell the story better than anybody as a founder.
Easy.
Yeah.
All right. Any last questions? If no, then we can give a round of warm applause to Amr.